What's up, everybody? Dave Bartosiak here, and I have another chart of the day for us. This time, we're talking about Lockheed Martin, ticker LMT. Now, unless you've been living under a rock the last couple of days, you've heard about the military conflict escalating over there in the Middle East. So, obviously, a defense contractor like Lockheed Martin is going to benefit from this. But I really just didn't realize how hot this stock has been. I'm zoomed out about as far as I can zoom here, and let's just look at from 2013. This is a stock that was under $100 in 2013. Now it's at 603. Pretty monster move, but really it's taken off this year. So as always, you folks know I'm a big fan of that 200 day. As well as the 50-day. And these stocks always tend to chop around their 50-day moving average, or as I like to call it, meander around or meander about the 50-day moving average. So when you get this sort of move off the 50-day, eventually there's going to be a little bit of a reversion to the mean, or that stock is going to come back to that 50-day. Now, we almost had that happen for Lockheed Martin. This is coming off its last earnings report here, where it just went, nuclear, just straight up, right? And then over the last few days, there's another big spike up after the Iran attack on Israel. But there were also some other little news bits here. So there was for 4 days in a row, there were huge contracts announced between Lockheed Martin and several DoD departments. So it was either all the armed forces basically. I saw an Army contract, I saw a Navy contract, tons of stuff for procurement of weapons and missiles, training, and all that kind of stuff. But yesterday, you definitely got the big pop on the news of the Iranian attack, caused a big volume spike, really on par with what you saw after earnings. So that shows a ton of institutional interest in the stock. But things get tough when you're up this high. You kind of go well, where else can we go, right? So some people like to use, you can use a recent low to give yourself an idea on some fibs. Since earnings, it's right around here, this gap up, I kind of like to do that. I kind of like to do the day of earnings to where we are at the highs. This gives you an idea of what might happen should the stock retreat a little bit. Now, given the action over not just in the stock's price, but what we're seeing in the escalation of these military conflicts, kind of feels like you're not going to get a huge, a deep retracement. But historically, that's exactly what you get. I mean, the stock doesn't go parabolic always, right? It has a tendency to sort of just chop along, move up, give some back, chop along, give a little bit back. And then, so this latest big jump up is not really something that characteristic of the company. So we can look back here. History doesn't necessarily repeat itself, but it rhymes, right? So you have this move up from 2021, looks very familiar, doesn't it? This big spike. And then, like I said, typically always happens. I guess that's a little bit of an oxymoron there, saying typically always happens. What always happens is there's a bit of a reversion to the mean. So eventually this 50-day comes into play. So it either comes with the 50-day just being so high that eventually the stock bumps into it, or the stock rolls over, as does that 50-day. And when it does, it comes back a lot. So let's see what happened last time. Okay. Let's look at these lows to these highs and see what type of retrace we got. Well, we got, look at that dip to the 38.2 there. Then you got another dip to the 50% level. And the last dip was a 61.8. Intraday move to the 61.8. That ends up being bought, and in retrospect was a pretty good place to buy. But if you extend this out, that was also another support level later on in the year before it retook the highs. So I know I talked about this in the Alibaba chart, and I gave about 75% probability of coming back and filling that gap, and then Alibaba's been rallying, right? So I'm gonna go and say this is a much higher likelihood of Lockheed Martin coming back and testing the 50-day and then giving some back than Alibaba, just because there's been so much of a tailwind for the stock here ahead of earnings, past earnings. And eventually all this good news kind of becomes priced in, and then it's going to come sideways a little bit, which should be good for investors that aren't in Lockheed Martin right now, because, maybe you feel a little bit nervous about buying up at all-time highs, up at 605, when it just had a huge run up, because you're looking back at this chart and you see so many times after that huge run up, it does retrace, right? So you get this a lot in Lockheed Martin. So I don't think there's any reason to believe that it just kind of skyrockets from here forever, right? Even during some of these really big runs like in 2013, you do get those reversions back. Let me zoom in on 2013 too, so we don't just think this is a recent phenomenon. So again, here, 2013, you got a big run up, gets back to the 50-day, great buying opportunity. Another run up, back under the 50-day, great buying opportunity. And this just kept happening, right? So if you're a long-term investor, that 50-day is going to be your friend. Of course, the 200-day is better, but it's going to be much rarer of a signal. So there you go, folks. That's what I have for your chart of the day here on Lockheed Martin. Be sure to check us out tomorrow. I'll have another one for you. Not sure what it's going to be yet. We'll figure it out today. So remember to follow the author. Click that button. It's around here somewhere. Subscribe to the YouTube channel. Come back tomorrow to check out what we got for you with our chart of the day. For everybody here at Zacks.com, I'm Dave Bartosiak, and I will see you tomorrow.